Hey, CJ Moss, Empower Lending. Hope everybody is having a great week. Been getting a lot of questions, been seeing a lot in the media about the new changes to pricing, about the Biden administration, and the narrative that I've been seeing a ton is that it's going to punish people with good credit, and they're doing that right to give a benefit to people with bad credit. So I wanted to kind of talk about what is actually happening, right? This is maybe a surprise, right? But the headline isn't exactly true, really, or telling the whole story. And so what all of this is referencing is something that is called loan level pricing adjustments. So a few months ago, Fannie Mae and Freddie Mac came out with new guidance that changed some of that. Now, loan level pricing adjustments are not new. They've been around since 2008. They are in effect today. They've been in effect again since 2008. So if you have a conventional mortgage, now if you're a government mortgage or a jumbo mortgage, loan level pricing adjustments don't matter to you. They do their own thing as far as differences in rates and pricing. But if you do have a Fannie Mae and Freddie Mac mortgage, there are some changes happening. Now, contrary to, again, the headlines, right? If you have good credit, if you have low debt, your rate is not being affected. There is not going to be a hit to your interest rate to subsidize lower credit. That isn't a thing, right? It is still pays to have good credit, have low debt, and your rate will not be affected, right? Now, what has happened in these new loan level pricing adjustments is the hit for having bad credit is less, right? You are still going to have a worse rate. You're still going to have worse terms than someone who has an 800 credit score if you have a 640 credit score, right? But it isn't going to be as expensive to get that rate as it was the past year, 2 years with these loan level pricing adjustments, right? So again, good credit, low debt, a good file is still going to have the best interest rate. You're not paying for someone with bad credit to have a rate that's better than yours or anything like that. It's just the hit to pricing is going to be a little bit less than if you were purchasing, let's say, a year ago, right? So important thing, this comes into effect in August, but it's going to be a little sooner than that, right? Because all of the changes that Fannie and Freddie make are based on what's called a shipment date, right? So you go under contract, you close a loan, it goes to the servicer and it gets shipped, right? So there's about 30, 60 days usually from whenever they put their date into effect to when pricing actually changes, right? So really my main takeaways from this, now there are some changes, right? They're important to know. They have increased the top credit score. So previously, or currently I should say, if you have a 740 credit score, that is the highest tier that would affect interest rates, right? That is now up to 780, and they have put in some stricter guidelines around debt to income, right? So if you're really pushing it, if you're really pushing a budget, then and your debt to income is higher than Fannie Mae and Freddie Mac would like it, there is going to be a little bit of a hit to the pricing of interest rates. So that's important to know. My really main takeaways from this is one, still pays to have really good credit and low debt, right? That is the priority. If you're working on credit, you should still be doing so, right? And it's still a good thing. Now, the second takeaway is again another good thing, right? If something has come up in your past, or you're not as great of credit as you would like to be, you're going to be able to purchase a home without it costing as much as it used to, which is a good thing, right? People being able to buy homes and people being able to afford more for homes, because that's ultimately what this is going to do, is a positive thing, right? Now that, again, important to know, taking away from someone with good credit, right? If you have good credit, low debt, you're still getting a better rate. It's just not as bad of a rate if you don't. So that's takeaway number two. Number three, this is going to make it quite a lot harder to just call myself or another lender and say, hey, what are rates, right? Because for some reference here on what we're talking about here, this is loan level pricing adjustments, right? So this is what Fannie Mae has come out with, and you can see there's there's a whole lot that goes into this, right? And each one of these are going to be have a different effect on interest rates. So there's multiple graphs here. So, hey CJ, what rate will I get? I don't want to apply. Was always a tough question to answer, right? When with this, it's going to be an even tougher question to answer, right? So it is really important to still go through the pre-qualification process. That way you have a good idea on interest rate, because if I don't know that your debt to income ratio is a little bit higher, or your client's debt to income ratio is a little bit higher, and I quote a rate, and that's the rate you're expecting based on the payment, and debt to income comes back higher, or there's income that we thought we could use that we can't use, right? That is going to have an effect on interest rate. That's going to have an effect. So really important to go through the entire process, to work with a lender, or have your clients work with a lender who is going to take them through the whole process, right? Is confident in the income, is confident in obviously credit and assets, because that is going to matter more here in the next couple months. So again, the articles you're seeing in the media, not exactly telling the whole story, right? Good credit is still the way to go if you have it. But if you have some clients, or if you have some credit that isn't, maybe A++, right? This is good news. You will have a more affordable mortgage, and your mortgage should be less. So any questions at all, or if you have scenarios or anything, feel free to reach out. I'm here to help. Thanks.